and a very good afternoon to everyone. I am Izzat, Director of Technology, Risk and Cybersecurity at KPMG. Today, I'm going to share some insight on the future of fintech and financial inclusion in Malaysia. No doubt that fintech is a new hyper trend and one of the buzzwords in technology world. We have seen an encouraging growth in the fintech market globally, and according to Market Screener, the market experienced an average of 6% annual growth and expected to worth about $26 trillion in 2022. Based on our publication, Pulse of Fintech, SPAC reflected similar trend with 7.5 billion investment in fintech just for Q1 and Q2 for this year alone. KPMG noticed that unbanked and underbanked as the main target segment for fintech in this region. The fourth industrial revolution and technological advancement have just jump-started Malaysia to embrace and adopt fintech in large corporations, small medium enterprises, and public and private sector. Based on a survey by CP Australia, 75% of Malaysia businesses are at least on one fintech product or services over the past 12 months. Today with me, I have representatives from investment bank, equity crowdfunding, community association, and technology firms. Please join me to welcome Diomedes Castanis, Karen Puah, Sam Shafi, and Tariq Ahmad. So let me start the ball rolling by inviting the speaker to introduce and share a bit on their background. Dio.
Hi everyone, my name is Diomedes. I'm CTO for Asia Pacific for Microsoft. Really happy to be here and sharing experiences, challenges, as well as opportunities together. Thanks to KPMG for inviting us, of course, and setting the stage of an exciting discussion. And looking forward to participate and contribute with some ideas and some empowerment from a technology standpoint into the fintech execution. Right? Thank you so much.
Thanks, Dio. Sam?
Hi everyone, my name is Sam Shafi. I am the CEO and co-founder of Pitchin, one of the 10 licensed equity crowdfunding platform by the Securities Commission. So we run an equity crowdfunding platform that essentially helps and assists companies to raise funding and for investors to invest in growth stage companies. Apart from running Pitchin, I also run a very small technology accelerator company called Watchtower and Friends, or WTF Accelerator, where we invest in very early stage companies before we then go out there and help them to raise more money and more funding from investors, be it VCs, in not just Malaysia, but also regionally. Thank you.
Thanks, Sam. Probably I would like to invite Tariq as well on the stage.
Good afternoon, everyone. I'm Tariq Ahmad, Deputy CEO of CAF Investment Bank and also founding principal of Tuas Capital Partners. CAF is a 45-year Malaysian banking group with activities in banking, stockbroking, funds management. And in the past few years, we've been embarking on a digitization journey, working closely with fintech startups to work towards a transformative banking platform for the future. Tuas Capital Partners in itself is an associated proprietary investing firm of CAF, which focus on early stage strategic partnerships, strategic startups with internal partnerships since 2016, and have invested in a number of domestic startups, including some well-known ones today like Genexu or Ringgit Plus, Money Match, and StoreHub. I'm very pleased to share what we have experienced with the panel and the rest of the audience.
Thanks, Tariq. I think last but not least, Karen, on to you.
Good afternoon. Thank you to SCxSC and KPMG for inviting me to this panel. My name is Karen Puah, and I'm the president of the Fintech Association of Malaysia, or FAOM, and also the country manager for Funnel Malaysia. So last month, our finance minister, YB Tengku Zafrul, delivered the opening remark at the Malaysian Banking and Finance, and he spoke about the coordinated approach towards ensuring progress in our economy and society at large, right? So he called it the 3R, right? The resilience, recovery, and reform directed to the financial institutions. So I think fintech companies will be the 4th R, which is ready, right? So for many years, fintech companies around the world have been pushing new innovations and products. So kudos to the thousands of fintech companies for continuously surprising us with their ingenuity. So FOM is a fairly young association. Today, we have over 100 members and serve close to 300 fintech companies who serving over 1.15 million SMEs. And that represents over 97% of total business establishments. And as a bridge for the companies, making us the national B2B fintech platform. So our motivation is simple, and that is to connect, collaborate, and catalyze activities and partnerships. Thanks.
Thanks, Karen. I think that's quite extensive in terms of the market update by itself. But yeah, just for your information for the rest of the participants, we do have a Slido open at the site. So you have any question, we'll take it on the fly. But if you have any specific for the panelists, do let me know as well on the question. I'll take it accordingly. So let's deep dive into the conversation. So I think one of the topics that everyone was talking about when it comes to fintech, gone are those days when whenever you want to build your prototype or even your product or even services, you require 10 people to actually work for you to build those kind of capabilities. However, now in the age of open and also collaborative, there's a lot of opportunity for everyone to actually embark on this particular journey and hop on this bandwagon. So we have seen the barrier to entry into fintech has actually lowered and lowered. And now actually everyone can leverage on online platform, for example, to build their prototype or even their tools. Now we can even see they have some sort like a graphical user interface that they can just drag and drop to build their product. As simple as that. So now everyone can actually do the same building of the tools and the solution. And if they do not know or they want to know more, the knowledge is actually available online, where they can go to YouTube to get tutorials and all of this. And probably words come to us, if they still want to figure out, they can always post on the forums or even community discussion where people will assist on that. Probably I'll just get an insight from Sam, right? Because now we know you also run incubator/accelerator where you actually help them to build those kind of capabilities. So right. How do you see in terms of this trend coming in Malaysia?
Right. Thanks, Izzat. As we all know, I think with the advent of technology, it makes things easier and probably also cheaper nowadays, right? So you don't even have to build it internally. You could outsource it to third parties, not just within your own country, but also outside of your own country, right? I guess the value that we bring in as accelerator owners or partners to these companies is that we help them in terms of what we think will be the most important thing, which is validating the actual solution which they want to offer. That to me is what I call the most important subject matter, whether we think this company will have legs in terms of building a viable business or not. So while technology has allowed us to build things far more faster and cheaper, I think what's is still more important is that it's really going out there and validating some of the solutions which these fintech companies want to do. We had the privilege and opportunity to actually invest very early in Money Match. Again, Tariq mentioned that he invested after that. We're very, very happy when Tariq came in. It validated the whole idea about Money Match. Obviously, as first investors into an idea, there are risks involved. Is that but once you validate them, once you help them to grow, then you will see other people coming in, investing in them, and thus de-risking the investment that we did in Money Match. So as everyone knows, Money Match is now a bona fide fintech company. They are part of the consortium that is bidding for a digital bank license. So they've gone far beyond what we've seen them 4 or 5 years ago when we invested in them based on a PowerPoint deck. Is that so? Yes, while I agree that technology has been able to help these companies to grow far more faster, I think it boils still down to the traditional ways of looking at the business and figuring out whether the solution will be actually something which the public will want to use.
That is very interesting view, in fact, because a lot of, as what we see, right, in Malaysia, there's a lot of duplicates, even when it comes to the service offering or even the capability that they're trying to actually showcase. probably I'll just get insight from Tariq, right? From the business case or even the use case that they are building, the business model that they are building, what would be the typical theme that you observe, especially when it comes to people that come into your organization, whether to ask for investment or even to validate, like what Sam mentioned, right? To validate whether is there any needs in this segment or not. What would be, what is your view in
I think from an investment point of view, thanks, is that from an investment point of view, one thing that, and this is a philosophy that we've always had in terms of investing on a proprietary basis, is that while the ideas are quite good, and in the cases most of us that we have, the ideas must be there, we find the strength of the founders is the underlying decision making when we actually do invest in anything. I think as we learn, we've always made mistakes. We try to judge. It's almost like hiring an employee. You on the basis of the interview, you actually discover in yourself whether or not this is the person who can take this business through, right through from the startup all the way till exit. And one of the things that this is a cliche that you have, but the business model will change, the founders won't. So when you build on that, and that's the direction of investment that we have. And of course, now the type of founders that you come into the current startup space will change. We would like to work with people now who are able to not go back to the early stage of, as you say, Me Too kind of applications from before, but it's somebody who can look to what's the next level, what's the building up the ecosystem developers, the ones who are looking to build on an ecosystem rather than think they can reinvent the wheel, because we're past that already. And Malaysia, for example, as you say, one of the things that we have is we have the tools and the talent, and that's all given already. The fact that we have a 10-year or more than 10-year startup ecosystem has built those tools and talent. But what Malaysia has, I think, as a big plus is that we actually have a government and we have a public sector which is accumulating a huge amount of data. And the future of fintech development and any startup development is essentially data. And and because we're unique in a country where we have public-owned data, public collected data in a huge fashion, although disorganized, that data represents a huge mine for new startups to try and tap. And I think the government will be very helpful in being able to access these new startups, to have access to that data without putting too much of a barrier for access of that data. And I think I'll give a simple example. Something like MySejahtera is accumulating a lot of data, it's public owned, and there's a lot of layers of startups that can build upon that for many applications. And I would suggest that founders look towards publicly accessible, publicly owned government data to build their new startup. That's what I would advise at this point in time.
Hold on that thought. I think we're going to dwell into deeper in terms of the big data and everything. But I would like to, right on the same point, I would like to pose a question to Karen, right, in terms of the people, because yes, we do have those business processes and all these ideas and also the concept articulated up front. But what Tariq mentioned just now, that actually people are the core, the idea can be pivot along the way. They can change the ideas, they can move their direction of in multiple various ways, but people's always consistent in this journey, right? So from your side as an association, like what kind of when it comes to the founders, we're talking about the people, the core team members, right? What are the common persona that you observe as well as part of the people side of things?
Thank you, Izzat. The thing with the fintech startups, especially the younger generation, I would say they're very gung-ho and they've got very good ideas. But the truth is there's also a lot of Me Too's out there, right? And they always come and then say that, okay, what if I do this, but I do it the other way, thinking that they can bypass regulation. So as an association, we do not encourage bypassing any rules and regulations. Very simply is that if you find the industry too challenging or too expensive, find something else to do, right? And then the 5 pillars that we remind the startups is to look at the number one is the talent. Do you have the talent internally? And then whether do you need the association to help you to connect with universities, for example? Number 2 is funding. So conversations with the investors sometimes can be a little bit challenging because investors don't understand the regulatory space. And then also they are very impatient. And if you are in a sandbox environment, for example, you can't get your result whether you are in or out within 3 months, right? Sometimes it takes 1 year, 2 years even. And the third one is like, do they have a good go-to-market strategy in place already? A lot of the times that we see things and activities happens in the CBD area. And then if you move beyond the urban area, you know, fintech is almost unknown, right? So echoing what Tariq just said about MySejahtera, I think personally, if you just put in a e-wallet in it, you don't need anything else already, right? And then the fourth one will be technology, whether they have the capacity and capability, and then working along with the folks from Microsoft, which has been the biggest supporter in the fintech industry and also the association. And then the fifth one is business environment, which basically means the regulatory side. At the association, we try to hold a quarterly meetup with the regulators, but it's thematic. Let's say, for example, if we're talking about InsurTech, then we bring the startups and wannabes to come together and then meet with the appropriate department from Bank Negara to have a conversation. So I think all these activities is what we hope can get some form of harmonization between the business players and the policymakers.
Yeah, I think that is exactly it in terms of there's another super trend, which we're not going to cover as part of this forum, where the super app kind of narrative will play a major role in the future as well. And probably I'll get insight. Thanks, Karen. I will get insight from Dio, right? Because Microsoft do run Microsoft Startup as well. And you do have those startup view of how startup build and how you actually push to the market. And at the same time, there's fintech as part of the startup in terms of the capabilities, buildings, and supporting the financial landscape. So Dio, probably from your side, right? In terms of the, because we mentioned about the business case just now, we talked about the people side. In terms of the technology, what kind of technology are we looking into in terms of leveraging? Because we know that people are talking about blockchain, we're talking about automation, RPAs, things like that. So probably we want to get your insight in terms of the technology side of things, Dio.
Yeah, thanks. I mean, first of all, great responses from all the speakers. I think one interesting, when I moved to Singapore from Silicon Valley, right, there is a very interesting cafe between De Anza in Palo Alto. And there is a very nice board in this cafe. It says, it takes one person, one laptop, and one internet connection to make $1 billion. And the reason why I'm saying that is because the path of resistance when it comes to technology adoption, right? And Sam mentioned it, Tarek mentioned it, Karen mentioned it, right? The path of resistance when it comes to be able to create prototypes, as you mentioned, as Izzat, right? The ability to do it in a cost-effective and secure manner, right? And the ability to scale as much as possible when it comes to definition of an MVP or production system has lowered its path so much that nowadays you can take any startup from zero to a big evaluation, right, in a very short time. Having said that, why technology becomes an important role, the second point I would say is nowadays we do not define startups or companies based on their technology maturity, but based on their business model maturity. Having said that, of course, technologies like automation, identity, security, compliance as code, machine learning, automation, data transformation, as well as blockchain. In some cases, we're seeing it picking up a little bit more. Becomes a catalyst, right, for the adoption of those solutions, right? So all in all, you know, at Microsoft, we are there to empower through our cloud services. And in fact, we are doing a very dedicated activity when it comes to FSI. We just launched Azure FSI Financial Services Cloud, very specific, very purpose-built for financial services, primarily because we believe financial services will be disrupted and it will disrupt. And therefore, enabling capabilities to deliver differentiated experience, empower employees with our first-party software through Teams, through collaboration tools, and so forth, combat financial crime, using technologies like machine learning, data distillation, and so forth. And last but not least, boost security and compliance, right? So because ultimately, in this very interesting point that Karen said, if you have a startup that you're investing in the FSI ecosystem, you anticipate at day zero a lot more maturity from a security and compliance perspective, as opposed to a startup that does social or a startup that does productivity and so forth. So I think there is an unfair disadvantage when it comes to maturity to startups, but rest assured that we as Microsoft working very, very hard to provide the technologies and tools to be able to be equipped to support all these startup ecosystem.
Yeah, I think that is the best part, because when it comes to the technology like yourself, like technology principle like Microsoft, you do have those design at the core when it comes to security, data protection, cyber resiliency, and robustness of the system itself is there. So that is something that a lot of people can leverage, especially when it comes to the cloud. They can just utilize those kind of platform and try to build, try and build something out of that platform and see whether does it works or not at the end of the day. And then they can open up those to give whether testing to the target segments, and also giving testing on POC for financial institution. So probably we'll go to the one topic that are leveraging on the technology side, when we see there's a lot of changes in terms of customer behavior, where people really want to have something more bespoke, more tailor-made for them. So we are talking about highly customizable, highly personalizable in terms of the product and services. So this require a lot of big data, like what Tarik mentioned earlier, right? There's a lot of big data required to be included in JES to make sure that you have more comprehensive in terms of what does the user require and wants. And because of that, with all this cloud, like what Dio mentioned, and currently the people, the core people players, and Sam, in terms of the ecosystem incubators and also the accelerators, we see that a lot of real-time data, data access in terms of multi-platform integration, like what we mentioned just now, if MySejahtera mixed with it's quite interesting concept though, mixed with the e-wallet, right, is going to be one of the biggest easily, because you have everyone in Malaysia need to have that MySejahtera app to begin with. So those kind of things. So probably from Sam, from your point, right, in terms of the building up those kind of mix and match to get the comprehensive holistic view of personalized financial system and product, what would be if you ask them what do you want to see on that platform, on their service and their platform?
Right. Thanks, Izzat. Let me sort of like narrow that into what we do at Pitchin, right? With regards to equity crowdfunding. So as everyone knows, equity crowdfunding is really democratizing fundraising and investing, allowing investors from all over the world to invest in growth stage companies. These are private held companies, not public companies, which means that information is a bit not as public as what normally people would know and understand if they're investing in the public listed companies. So when we talk about data, that's really, really important in terms of being able to assist individual investors to invest in a particular company. Prior to this, these kind of investments were only open to big investors, people who are already schooled and educated in this particular field. Someone like Tarik, he does this every single day, that's his job, right? But for the normal investors, the man on the street, right, this is something which is something new, right? And the risk to that is that if they don't understand it and they just willy-nilly invest in something which they don't understand, the risk is that they would probably lose a lot of money. And that's for, I think, data and how we package those data to allow investors to actually make a decision that is neutralized to their risk appetite is very, very important. With regards to equity crowdfunding, is that we're not there yet, right? Because the data is not there yet, right? Comparable to public information, which why you see a lot of robo-advisory companies have done well, right? The likes of Stashaway, MyPO, they're really doing well currently in the market, right? And people like me who may not understand the public market can just put aside 100 ringgit and let that money grow, right? Whereas it's different from equity crowdfunding. So if we talk about data in terms of what Karen and I do, in terms of where we work with our own ecosystem, we're far, far beyond that particular data compared to public information that some of our peers are working on. So for us, it will take a bit of time. Is that again, those data are all over the place. But at the same time, realizing that what we're doing in pitching right now is to really slowly grabbing that data, because we do have aspirations to launch a secondary market soon. And that particular data will then be very important to investors who may want to buy and sell and trade their shares. So that's my, what I call my angle in terms of data in relation to what we do in equity crowdfunding.
That is a very good insight. Probably I'll write the same point for Tariq, right? So we did mention about the open data and also data sharing for the fintech to actually use and to build up their solution and their capabilities. So probably Tariq, in terms of what do you actually observe already, and probably what you see in investment bank, right? In terms of data that actually they use to actually build their capabilities as part of the fintech service offering.
Well, I think a lot of startups that we've seen who want to work in the fintech space are trying to find data sources to provide a layered solution on what is the traditional banking platform or the digital banking platform, which we're going to have. And this is, I think, one important thing when you see the fintech, ultimately going forward, what is a bank? And you have to realize, ultimately, at its core, a bank is a regulated ledger. And you must be the best type of regulated ledger out there, and you provide that platform, the compliance, all the regulation. And as what Diomedes brought up, the technology needs to be mature at that point in time. And that part of the technology is very important to the regulators. It's the ability to maintain cybersecurity, KYC, all those things. But everything else becomes a layer. Every service, every new mini app, which I expect startups to go into, would have to be a layer that partners onto this regulated ledger, which is maintained and highly regulated, because that's the most important thing. The most important thing is for the stakeholders to not lose money. But the services that you provide, all those are, I would say, is hunting season, because that is now accessible. Whether you get the data from what we have, the government's publicly accessible data, or from other innovations, they've got the tools and you've got that. That's why, going back to your earlier point, you mentioned about open APIs in open banking, that then becomes an important part of any future banking platform, whether traditional or digital. And that traditional digital banking platform needs to make those APIs open to all startups onto some kind of marketplace, because while you may have some banks which say, I want to be a big bank to control everything and become the super app, one of the problems that we've seen in terms of super apps and that kind of, which is, I'm sure there's a space for that, but you will notice that every time you find that, oh, so-and-so app, they want to update your app before you can get these new services. And we see the progress of a Play Store or an Apple Google Store, you'll find that the latest version of that app is only adopted by maybe 40 to 45% of all users. So as you want to progress and incorporate new services by these startups into your regulated ledger platform, you then face the challenge of how to get everybody to update the app. And that's where a new platform called conversational banking is something which is being discussed about along the open banking circles, where you need to combine both API versus open API-based banking so that startups can deliver maybe micro insurance services, maybe micro investment services onto a regulated ledger layer. And then beyond that, they are then able to access those channels without having the end user having to update that all the time. And these channels are already there via your chat bots, via your chat platforms, whether it's or even via voice channels. And I think this is one of those areas where a platform of the future to help build that startup ecosystem within the fintech space, where you need maturity in the regulated technology space, but you need to be open within the services and product space. So I think this is one of those things which new founders and new banking platforms need to consider, because that really is the way things are happening. And you see that in the West already. You see micro apps riding on robust regulated platforms.
Yep. It's already happening in some part of the world. That's right. And probably I would just like to gravitate back in terms of the financial inclusion as our main topic for today, right? Because we do observe when it comes to example in Malaysia, we don't have that much of a problem when it comes to unbanked, but rather the underbanked, which they don't really have the full-fledged of access of the financial services, not just Malaysia per se, but I'm talking about generally even when it comes to Southeast Asia, right? So probably I would want to get insight from Karen, because one thing that we observe as well with all these automation tools and technology and all of this, we have seen a lot of things are automated. For example, those days, if you are categorized as certain segment in the financial institution where you are high net worth individual, for example, you'll be allocated relationship manager. And now with with a digital personal assistant, they can actually act that advisor to have basically the same service for the rest of your customers. So what kind of because since you are embedded in the Fintech Association itself, right, Karen, what are the trend now we are looking for? Are they going to actually build those kind of automation for the market?
Thanks, Izzat. So I think if you have like Stashaway or Rise or MyGeo app in your phone, you already can feel that pushing into your space, where they send you reminders when it's closer to payday, right? Like, hey, do you want to top up another 50 or 100, right? But sticking true to the lane of financial inclusivity, I think the partnership needs to go beyond just an app and also beyond the CBD. Again, I keep emphasizing on this is because like a few days ago, Topa just announced that because of COVID, there's 600,000 M4 has now become the B40 level, right? So that is quite alarming. So how do we then help these people to get out of it, right? So we have been participating and organizing dialogues with either government agencies, the likes of Magic and MTech and TPM, and also with the private sector. But all these are just talk, and that's not sufficient, right? So we need to like look at the roles of each partner and then do follow through to get results. And results may not necessarily mean change in policy or making it easier for fintech startups to join in, but to look at if we look at like the ecosystem partner, the public sector agencies like the government and the regulators, whether easing friction and getting us more incentives in the private market to prioritize advocacy of digital and financial literacy, which is a big thing, right? Not just in Malaysia, but globally. And then you need to have participation from the private sector and to a very large extent, the Ministry of Education. In our conversations with the universities, right, they want to start minor for fintech, but they don't get the approval. And if they don't get approval from MQA, that means their degree is not recognized. But it is such an obstacle to convince the folks at the MQA that fintech is relevant and fintech is here to stay. So that is one challenge. We need to have the bank and the insurance associations participation. And of course, the fintech platforms, right? So they have the resources. They need to have the resources to advance the financial literacy program. And then they need to better understand the consumer behavior, such as the areas around trust deficits, and then sharing this information with government agencies to inform the country and then the regional level initiatives. So everyone needs to play a part to talk about the same thing to bring awareness. And then the last but not least is actually the NGO for the last mile to access the financially excluded division with the ground intervention. So just to give you an example is that if you go to Wiki Impact's website, it is a NGO by a Malaysian group of people. They track the poverty level. And you will see when the government gave out the 50 ringgit subsidy to the e-wallets, there's the most affected area are the poverty affected area, where they either don't have the handphone to claim it, or there are no merchants there to access to it. So it is going beyond just the app and the tech, right? It is really going down to the ground and getting it done. Yeah, thanks.
It's really like it's quite fascinating when you go to the ground, right? And then you start to realize that even, for example, initially we were discussing when it comes to financial inclusion, we thought technology and tool would be the limitation, but rather language can be a barrier as well. And there's probably another dozen of other barriers that we don't see until we go to the ground and see what's really going on. probably I will take Dio insight when it comes to example, right? So people are talking about multi-language, multi-accent, all these things, right? With NLPs, all this robotic automation, probably Microsoft side of things. What kind of development to cater for these kind of needs, Dio?
Yeah, no, great question. I mean, I think this multi-X strategy, right, is applicable for multiple areas of the value chain, right? All the way, as you said, from interactivity, whether it's through natural language processing, using, various formats of communication, whether it's written, whether it's a voice, or whether it's any other form of interaction, all the way to supporting a variant of cloud adoption, right, against multi-cloud. As well as hybrid cloud, right? So we see a lot more liberty when it comes to topology selection and technology selection, as opposed to a single cloud vendor that I will work with. And moreover, we not only see that, but if you look at traditional banking, right, we see now more and more banks embracing what we call multi-core type of approaches, right, where they could have multiple banking core capabilities coming from different vendors and different providers in order to achieve one thing: best of breed capabilities coming together, all the way from natural language processing, from cloud selection, from resource selection, from security selection, from core selection, and so forth. So we see a lot more, let's call it democratization of innovation, right, and choice of choice of technology. And that's why even at Microsoft, right, if you look at the way we lead this particular let's say area, is through our introduction of multi-cloud support, right? So we have products like Azure Arc, security, identity, right? That no matter where you're coming from, you should be able to interact with underlying subsystems and overlaying clouds in a single common data model, right? So, or common communication. And going back to NLP, obviously, there is certain challenges when it comes to dialects. I mean, we'll see a lot more dialect becoming a choice or a selecting factor. But what we also see is a lot of new startups in the area of natural language processing. They're coming specifically from specific areas, right, in regions like Malaysia, Indonesia, Philippines, and so forth, to embrace that differentiation, right? So all in all, I think the cloud adoption framework, right, and the digital adoption framework enables and creates opportunities for other people to innovate. And last but not least, our mission at Microsoft is exactly this: empower everyone in every enterprise in the world, right, to achieve more, right? So that's why we like that openness and multi-X factor. Yeah.
Yeah, it sounds really expensive, and I think we have one question from the participant asking, because financial inclusion is quite expensive and high risk when it comes to addressing those problems and trying to solve the issue. So, what are the advice? Probably I will get from Tariq. What are the advice in terms of getting those finance support? And what would be the right way to actually what is the strategy rather to increase those funding capacities, Tariq?
Well, I think this is where we've always pushed to the financial inclusion issue towards credit on the credit side. Always we're trying to say we need to lend more, and financial inclusion shouldn't be drilled down purely to lending more to people who would not be able to pay back. And that you see the problems coming out of that in Indonesia, you see the problems coming out in the Philippines, and that might not, that is not the framework of from the point of view of what we see in terms of what financial inclusion is basically access. The capital is already there. The banks are usually overcapitalized. Every traditional bank is usually overcapitalized. It's just the pricing of the risk, and that risk will be priced accordingly when more data is known about the people you're lending to. You can't take away the risk premium assigned to lending to people. So lending, that risk can't go away, but being able to price that risk and being able to calculate that risk is not what takes a lot of capital, because that's where innovation and data access needs to come out. I'll give you a simple example. SMEs, for example, are in requirement of loans. They pay high interest rates, they pay high charges, simply because the traditional bank has got a standard credit model. If you're an SME with this amount of data, on the limited data that they have, they will provide this amount of capital and this amount of ratio based on what you have. But there's a lot of data from SSM, for example, which if given free to everybody, would be able, which would enable credit bureaus, even startups focusing on credit, to be able to provide credit scoring on SMEs that gives additional data that says, well, okay, we won't use a standard model. There's a better pricing for this now, and we are able to provide loans where we no longer can. So it's actually access to that data, access to the information to make the pricing of risk cheaper. And it's not the capital that's lacking. We have the banking sector is in an abundance of capital. What is missing is the information to allow that capital to go to the right people at the right price. And I think this is something which, this is a language that both the regulators and the policymakers need to understand, that by releasing the access to JPN data, to behavioral data, which is owned by the government, that will enable better pricing both on the needs space of the B40 and the needs space of the micro SMEs and SMEs. So I think from that point of view, I don't believe that capital is a hurdle for this. It's really just sharing of information.
Yep, I think it's a double-edged sword actually. In terms of when they have the data, it can work both ways. One is basically to get investment, at the same time can profile your potential customers as well at the same time. So I think it's really, because at the moment everyone is looking into they're looking into alternate credit scoring, for example, right? No longer the traditional models where they bill for individuals, but rather they use your utility bill payments, your telco subscription, or even social media presence to build a persona for you to actually get loans or even get financing for that matter. And probably, when it comes to all these unbundling services, or even last mile, like what you mentioned, Karen mentioned just now, last mile delivery and microfinancing, probably from Sam, from your side, right? In terms of getting those kind of traction, what kind of when you talk to the investors, right, what kind of things that they're looking into when it comes to investing to these particular fintech players?
Right. Thanks, Izzat. Again, I think it's traditionally when investors look at companies to invest, it doesn't really differ from what traditional investors look at in companies before they decide to invest. I think Tariq mentioned just now about the importance of the founders, right? Not just in terms of the idea or the domain, but also whether the founders have the right tool skill set to actually do this. And that's really what investors look at, especially when companies are still in the early stage. I would argue, and again, would love to hear what Tariq thinks also, but I would argue that until the company raises a series, until series C or D, it's still entirely the founder, right? After that, you could put anyone, right? And someone joked that, again, with all the respect to the banks out there, when someone spoke that you could put any person in the CEO post and the bank will just run as it is, right? So that's an example of a company that is really, really matured, where founders, the ability of the founders are not really questioned anymore. And that's why you see people like Jeff Bezos now giving up his CEO post to focus on other things, right? But when companies are fundraising on a platform like Pitchin, it's still about the founder. That's still very, very important. From what we observe is that a lot of investors want to spend some time, especially the high net worth investors, the bigger investors. They want to spend time with the founders to really understand who they are. So the founder is still critical. Apart from that, is that it's still about the business itself, how it's growing month to month, year to year, comparable with their competitors, how they differ themselves from their competitors, and how those companies are positioned not just in Malaysia but also regionally, right? Because investors like to see those companies growing out from Malaysia. So those are the typical things that investors look for before they decide to invest. It's a bit different from, I would say, retail investors, is that I think retail investors are much more, they respond more towards trends, they respond more to what they are used to. So if you're a user of a particular service or a product and this particular business is offering themselves to raise funding, you would see their own users and their own customers buying into their investment. So it's quite interesting to see how investors behave in every company that we offer for fundraising.
Yeah, good point. Yeah, probably I'll bring in a bit of statistics. So basically in Malaysia, because we're talking about Malaysia specific context, right? So in Malaysia, we do have those IR 4.0 top-down kind of approach, and government have basically published the My Digital Blueprint. They are talking about they are planning to create 500,000 new job opportunity in the digital economy, which are 22.6% out of the Malaysian GDP by 2030. And we see this is something not just starting, but it have been started for quite some time already. And they wanted to actually assist 875,000 micro enterprises and SMEs to go digital via e-commerce and everything. And this pandemic actually helped them even further, because now we know that, and we observe as well, most of the bank have moved their onboarding, bringing their new customers into digital channel. And probably I would just want to pick on Dio's side, right, in terms of technology side. So we are talking about blockchain, cloud and everything. Now, even when it comes to blockchain, people are using blockchain to prevent fraud, you know what I mean? So what kind of technology can actually the participant take back and also use and consider to build their next fintech solution and product?
I mean, again, the technology, let's say, stack, right, has different capabilities all the way from infrastructural capabilities. How do you build a high performant, a highly available type of service, all the way to more application-centric capabilities, right? So, for example, you start all the way from compute, edge compute, data services, identity, security, of course, across those boundaries. And then the more you start embracing the application you want to achieve, you might be employing things like machine learning or artificial intelligence or blockchain capabilities or automation and so forth, right? So it really depends what you try to achieve as an outcome. And I like also the comment that Tarek said, and you said about cost. That will determine, together with the cost aspect, right, what is the right technology choice to always be available, to always be secure, and to always be compliant, right? Different problems can be solved with different type of solutions, depending on the availability factor, on the KPI you try to achieve, and the cost consideration that you might have. Some solutions might be a little bit more performant, but they might cost more. But when performance is not the key denominator of your achievement, right, you might choose different type of technologies in order for you to achieve the same outcome, right? Obviously, cost is consideration, but I would say in most cases in the fintech environment, the dominant gravity of KPIs is around security and compliance, right? And then this is where blockchain can play a role of trust and transparency and observability. We see a lot of new use cases now, like KYC, trading, using blockchain, which is not necessarily mean that only blockchain can do it, but it means they can do it in a way that is very observable and transparent, right? Maybe much more. We see even machine learning models being stored now in blockchain in order for you to get that trust of that machine learning model prediction that is not influenced, unbiased, right, for a specific outcome. So, as I said, right, confidential computing, DevOps, identity, and so forth, all those are critical technologies required to build a sustainable application in the fintech space.
Yeah, I think that the technology are there. You just need to truly understand what technology can offer and leverage.
It's an enabler. It's an enabler, right? So, and that's why usually when we design together with partners, right, we start from the outcome to the technology as opposed from the technology to the outcome. It's a different type of technology selection you might want to have if you want to scale to billions of users, as opposed to a very vertical focused application that requires high precision, right? And to your point about even personalization, right? When you mentioned the topic about personalization, we see a lot more technology choices following a small data type of strategy as opposed to a big data type of strategy, because everyone is different. And you cannot necessarily infer a behavior just because of what Izzat is doing to what Diomedes is doing, right? So we see those technology shifts and mindsets changing depending on the outcome we're trying to achieve.
Yep. Very good. Yeah. So I think we do have another 10 minutes or so before if you have any other Q&As, right? Probably I would just want to ask probably last key takeaway or probably last remark from each and every panelist for the participant to take away from our today's conversation. Probably you can start with Karen.
So thank you. So I would like to touch on the data and My Digital again, because like you mentioned, we have already started the journey, and we have the Malaysian government central data exchange, right? And hopefully by 2025, 50% of the data shall be accessible to everyone. But to put things into perspective, we are advocating the sharing of behavioral data among organizations because behavioral data is not deemed as private data, as long as it cannot be used to identify the individual who generated the data, and then hence removing the PDPA issue aside. So one example is the 50 Ringgit e-wallet subsidy, right? We do want to know whether it's fully redeemed, where it has been redeemed, and who is actually missing out. And I believe that for the My Digital to succeed, data sharing is very important. And then the fintech industry players will then be able to expand and scale from there. Yeah, thanks.
Thanks, Karen. Yep. Probably Tariq, from your side.
I think I'll just wrap up because more towards addressing those wanting to go into fintech startups and the way that the landscape is coming along in terms of banking and in technology and banking is that try and build onto platforms. And this is where, and on the other hand, banks are going to, and kicking and streaming, will start becoming platforms. So as a fintech developer, try and work with banks to try and build onto platforms rather than doing the next big e-wallet, the next Me Too, or the next way of bypassing something. I think the best example of the next generation app is something like Shopify, for example. Shopify is an e-commerce store, but there are many technologies that build onto the Shopify platform that leverages on what Shopify does best. So I think banks of the future will be doing regulation best. They'll be doing ledgering best. They'll take care of it's their job to take care of the PDPA, the cybersecurity, the corporate governance, the compliance. That's their job. And that's what their license has them to. Everything else on top of that needs to come in either through co-creation or through partnership with a new fintech startup that takes care of all the groundwork, so you have at least a 60% mature product by being a partnership on that platform. And inclusion goes beyond just in terms of extension of credit. Inclusion goes even beyond just the B40 because it's also an age thing. There are a lot of people at the old age who are excluded because they can't adapt to this new technology of downloading new apps. So that's where that area of inclusion is also important for us, because ultimately we want a society going forward which is financially literate, which is disciplined, and which is able to take advantage of technology to make their lives a lot better. So I think that's kind of like how we would close looking at fintech and financial inclusion.
Yeah, it's over-compassing in terms of there's multiple facets to it, that not just one to address, but rather I think the good point that you raised earlier was rather than build a one big product, might as well just work on in the specific customer journey that you're trying to basically tackle. Thanks, Tariq. I think Sam, how about yourself, Sam?
Sure. I would love still to stick to my lane with regards to fundraising and investing. But again, marrying the points which everyone has pointed out in terms of data and how we get a lot of more people involved in this, right? The mecca of crowdfunding and fundraising is really in London, in the US, not really in Malaysia. But then again, following up from what my peers have mentioned just now, I think there is a lot of data that can be massaged and derived from the hundreds and thousands of companies registered with the SSM. This is really a cottage industry that is begging to be built upon, where we can then put them on platforms like Pitchin, and then for everyone else then to look and invest in the next company that will pave the way for Malaysia. So without all this, we will still be struggling in terms of data. And this is where I think the next platform that will be built by Malaysia to help other Malaysians to decide on which company or which startup they should be investing in based on information that they will be deriving from the data they will be scrapping. Yeah. So I leave it as that. Again, it's a challenge to the listeners out there, the startup founders out there, to then use this as a catalyst to help the investment landscape here in Malaysia.
Yep. And data obviously is a new currency and a new oil. So whoever holds the data is actually holds the insight of the customers and the whole population. Dio, we saved the best.
No, I hope I do a good one then. So anyway, so I would say two types of advices, right? So one is to the startup people that they envision to do a startup or they're doing a startup, like be bold about your ideas. The reason why I'm saying that is a lot of times when you go to a regulated environment with a lot of, let's say, normal thinking, right? We tend to get disappointed just because we bring a new point of view. I think staying close and staying humble and staying, focused into the idea is very, very important for a startup owner, because most of the times you will get a lot of recommendations to stay within the norm, but usually when you stay within the norm, sometimes you lose the magic of a startup, right? So therefore, be bold and be open, right, to new ideas and new capabilities. And if I had a small mini idea within that escape, think about new concepts and not concepts which I've already implemented, like sustainable banking, green investments, and so forth. Right? There is a new space of amazing ideas that you could be thinking about that they are completely untapped. Carbon twins and so forth, right? Especially when it comes to FSI, which I think are ready to be explored and they are untapped from the current marketplace. And when it comes to the ecosystem, right, what I would like to say is that policy compliance and governance, right, has to evolve together with technology evolution, and one need to self-feed each other, because a lot of times we see when we don't see rapid acceleration of an ecosystem, it is either because compliance and regulation moves faster than technology, or technology does not move in tandem with the compliance. I think having that open discussion between regulators, established ecosystems, and technology providers will actually allow an ecosystem to flourish sooner with less risk and a lot more collaboration, right? So collaborate to co-create and think big and think bold to drive more innovation across the FSI ecosystem.
Yep. I would like to echo on Dio's last point on the green financing. I think this is something that everyone is looking into as well. The sustainability, ESG and SDG alignment when it comes to building your fintech product or even any other tools from the startup side of things. So before we close this session, thank you all. I really enjoyed the conversation today. But I would like to take this opportunity as well to actually tell everyone that tuned in today that KPMG, we are running a sustainability challenge accelerator, which it's in collaboration with My Fintech Week 2022, which we open for registration as early as next week. And the theme is basically to enable green financing, ESG system innovators. We are driving financial inclusion, like what we discussed today. And obviously, we want to shape the sustainability behavior for the better future in Malaysia. So do participate, do join, look into our website to get more information. And please help us to spread the word. Thank you very much again. And I hope you enjoy our session. See you tomorrow at 9 a.m. Thank you, everyone. Stay safe.